got a good one for y'all today.
Is he gonna come in here? He's gonna kick my ass.
What's going on, brother?
Hey, big man, how you doing?
What's up, Sean? How you doing, man?
We're actually staffing up as well. We're bringing on some more operations and some more sales. So that's always fun with the training and what have you. But yeah, no, we're like you said, you don't want to complain. You don't want to complain for being in business, but it's not boring right now.
It's that pressure, man.
That's right, man. That's right. I'm glad you guys are cranking though. That's huge.
Yeah, thanks, man. It took a lot. I'll say this: it took a lot of L's to get to this point right now. It took a lot of losses, and redirecting your aim. And just as you're going through that phase of your losses and then your bounce backs, it's like you're learning how to implement certain little things to tweak or make better, for the systems and for the business overall agenda. Yeah, man.
No, I'm with you there. It's I think if you don't have the L's at the beginning though, you don't even know. I think that's the worst situation because you don't know how to handle adversity. You're just coming out the gates and you're like, yeah, this is life,
Yeah.
I'm just always winning. I'm just always killing it. And then, you start hitting those hurdles and you're like, that's not the script, right? It's not, we're not supposed to have any problems here. And then I think that's the scariest when you see people come out the gates like real estate investors. They get a smoking deal or two, they quit their day job, and then it's crickets for months. They're like, what's going on? This isn't, how it's supposed to be. And it's like, yeah, this can happen,
Yeah, I've been through it. I can tell you've been through it too.
Yes, sir. Yeah. It's painful at the time, but then when you're winning, like you guys are winning now, then it makes it that much sweeter and it makes you able to handle stuff.
So you got this, this thing that everybody needs to know about, man. American IRA and self-directed IRAs and 401ks. Got the solo Ks. Like, I think that this is so amazing, and I think that the world really needs to hear about this, know about this. For everybody that doesn't know about American IRA and self-directed IRA accounts and 401ks, a lot of people just get lost into the sauce, man, when it comes to 401ks. And I don't even think that a lot of people even know that a self-directed account even exists.
No, I'm with you. I think that's pretty typical, unfortunately, it seems like a real confusing world when you're talking about retirement accounts and all the options available to you that, we'll get into. That's really kind of, I think what our role is just to make people aware of what can be done, not ever selling products or trying to push them into a certain type of investment, just kind of bringing awareness, and then everyone gets to kind of decide where they want to go with their retirement accounts. Perfect. So today, I really appreciate it, Breyan, you allowing us to share the message of these self-directed IRAs and 401ks. I think there's a lot of benefits to it. Really, when you look at these self-directed IRAs and 401ks, as we just mentioned, it's the ability to just simply invest your retirement dollars into assets that you understand. So whether it's real estate, whether it's precious metals, you get to pick what makes sense for your portfolio. And this is a great way to protect your assets as well. Bad things happen in life. There can be car accidents, there can be issues. And the great thing about retirement accounts is they are really protected vehicles. They're what's considered trust accounts. And so largely, those are not brought into problems that can happen to all of us just as we go through our life. So great asset protection for these retirement accounts. And especially for those of you that are real estate investors, this is a really, really great way to raise money so that you can do a fix and flip on a house, or you could buy rental properties, or whatever your strategy is. These retirement accounts can be the backbone of how you actually fund your deals. So a lot to dig into, obviously. But as we talk about these self-directed accounts, hopefully keep two primary things in mind. The first is, as the name indicates, a self-directed account is one in which you as the account holder are making the decisions for your portfolio. So we're not advisors at American IRA that'll sit down with you and say, you should have this much in terms of your mutual funds, this much in bonds, stocks, etc. You get to pick however you want to structure your portfolio, which gives you the most freedom possible. And so as you're structuring that portfolio, keep in mind, you can still do stocks, bonds, and mutual funds with us. But the main benefit of our service is what we consider alternative assets. So clients can invest in, as we mentioned, directly into real estate deals, not some publicly traded REIT type of product, but you can actually buy 123 Apple Street in Tampa, Florida, for example, with your IRA or 401k. You can invest in privately held companies. So somebody might be creating a new business in your community, or they may be looking to take that business to the next level. And so you can invest in someone's opportunity. And so if you kind of reverse that, Breyan, obviously you're an entrepreneur. As you're working through your businesses, if you find, okay, we need some more capital, this is a great way for you to talk to people in your community. Even certain family members can qualify so that they could get involved in your business and either lend you money or actually be an owner essentially in the business, actually have equity in the business. So a lot of different applications for it. So at American IRA, we're considered the third-party administrator for your self-directed IRA or 401k. And basically all that means is that we're the company that holds your retirement account, and we're the company that you interact with so that you can purchase assets, you can sell assets. The thing that's unique about our company is we're fully integrated, meaning we have the same parent trust company ownership. So the administration company and the trust company have the same ownership, which means for you as the client, American IRA gets to control its own destiny. Kind of the scary thing for a lot of self-directed companies is they're reliant on a third party to be in business. So if that third party says, hey, we don't want to handle these types of investments anymore for your clients, they can give you a 30 or 60-day notice, and you got to find an entirely new trust company to work with, which is not where you want to be. That's scary. It's and usually it takes a lot longer for trust companies to vet your company to see if they want to do business with you. So that could be real scary. And so at American IRA, we like to think that we're leaders in terms of very low fees. Most companies will charge you more money as your account balance grows. Our feeling is, since we're not advising you, you're the one making the positive decisions. You get to see the upside as your account balance grows from 10,000 to 100,000 to 500,000, whatever it may be. You get to keep the upside. We don't get to kind of tag along and make more money on your account each year just because you're making more money inside your account. We're also very different in that we're also investors ourselves. You know, Breyan, you and I found each other through investment groups, and that's something that's a big part of my life. My wife and I built a rental portfolio. At American IRA, we're not just talking theoretically. This is what we do. You know, we're all about these investments. We're all about, especially for myself, real estate and trying to build that long-term wealth. So I think that's really useful for our clients, having vendors that are doing deals as well as you are. So you can feel the expertise, and you can feel that our team is really kind of a senior team. Most of us have been with the firm for 8, 9, 10 years. I've been fortunate to be with the firm for over 11 years. So a lot of continuity and a lot of expertise at our firm. And so when you're looking at these accounts, hopefully, if nothing else, I make clear today that all of these accounts can be quote unquote self-directed. So when you have let's say an old 401k from a previous job, you can roll that over to any firm that you like, whether it's a securities-based firm like Vanguard or Charles Schwab, or you can also come to a firm like us and have that traditional IRA set up. So the retirement accounts are exactly the same ability to make contributions each year, the same ability to take money out of the retirement accounts in your retirement years. The only thing that's changing with us at American IRA is that you are picking the investments and you have a wider array of investment opportunities. So if you have a Roth currently, you're going to have a Roth with us. That self-directed term, it's really just a marketing term that lets people know that you're the captain of the ship and you can invest in a wider array of assets, but your retirement account is not changing in terms of its form whatsoever. So there's also plans, what we call employer-sponsored plans. And so for those that are entrepreneurs, that are self-employed, I actually did a webinar this week on solo 401ks, which is a tremendous tool, SEP IRAs, simple IRAs. So if you have small businesses, there are definitely some opportunities where you can self-direct these retirement accounts as well. So we're actually going to run through a little bit of the solo 401k. This is kind of taking some of the Cliff's notes from what we talked about earlier. But solo 401ks are really, really powerful tools, and they can be really useful for individuals that are self-employed and do not have full-time employees other than a spouse that works in the business or what's considered a highly compensated employee. And so that's defined by the IRS each year. But basically, if you have an employee of the company and they make, let's say, a couple $100,000, they're typically a highly compensated employee. And so you can still have a solo 401k with them. And so since it's still the tail end of 2019, so we really kind of focus on that tax year. It's 56,000 that you can put into the account, up to 56,000 for individuals under 50. And if you're 50 and over, you can put up to $62,000 into that solo 401k just for the tax year of 2019. So it really is kind of like the retirement account on steroids. A lot of benefits to it. 56 and 62k depending upon your age. So as you dig into the contributions, really when you look at the solo 401k, there's basically two aspects to how you can get money in the account. So there's the employee bucket, which for individuals under 50, you could put up to 19K into that bucket. The cool thing about that is if you choose to, you could actually make those Roth monies post-tax money. So you don't get a benefit when the money's put into the account in terms of your deductions, but the money grows tax-free. And so you can grow that money over perhaps even decades. And then when you pull that money out, you don't pay taxes or penalties for that. So that's a really unique aspect. So that could be pre or post-tax monies. I know I'm throwing a lot of stuff out there. Basically, we're just trying to give you as much info as possible, and definitely feel free to contact us and we can kind of talk to you individually about these aspects. But so employee bucket, 19K if you're under 50, 25K if you're 50 and over. And then on top of that, there's a profit sharing aspect as well. So depending upon how your company is structured, you're either going to be able to get 20% of the net income if it's a sole proprietorship or a single member LLC, or if you have typically partnerships, C Corps, structures like that, many times it's 25% of the profits in that business can also flow into the 401k contribution. So when you combine those two together, you're going to get 56 or 62k max, depending upon how old you are. So again, if you're just getting started in your business and that first year you make, say, $30,000 in the business, and obviously you have to have some money to eat and pay your bills and do all that kind of stuff, but you might be able to still squirrel away some money. You might want to put that into the employee deferral bucket. And then as your income grows and grows and grows, you can put more and more up to that 56 or 62K as you're just kind of growing in your business. So aside from the really high contribution limits, there's also the ability to borrow from the solo 401k because it is a 401k product. So it's 50,000 or 50% of the balance of your portfolio, whichever is less. And so again, the example is $30,000 account. You could put you could borrow up to $15,000 because that is 50% of the balance of the account. If you have a $200,000 account, you're limited to $50,000 that you could borrow personally for that. So this is kind of an advanced concept, but one thing to keep in mind is you actually have the ability for your retirement accounts to use leverage, to use mortgage to do deals. So, maybe on a fix and flip or a rental property, or if you're going to build a spec house, you might need to have your retirement account borrow money to do the deal. With IRAs, it's a little bit trickier, and there's a lot of ways with leverage that you might have a tax consequence. Conversely, with a solo 401k, if you're using leverage, using a mortgage for the initial purchase of the property, you actually don't have the tax consequence of UDFI, unrelated debt financed income. So again, that's kind of investment specific, but for those of you that are real estate investors, I've seen clients actually save tens of thousands of dollars by doing, let's say, a new build inside of a solo 401k versus a Roth IRA or traditional IRA or some other account like that that might have the UDFI aspect. So can be really, really beneficial. As is always the case, definitely speak with your CPA, and you want to make sure you're pretty clear on that. So as you look at the investment options, basically the way the IRS code is written is it tells you what you cannot invest in, which is basically collectibles and life insurance policies. So as you see, this is not a complete list of anything that people could ever want to invest in with their retirement account. These are definitely the most popular options. So as it pertains to real estate, basically any type of real estate can be purchased. So from raw land, condos, townhouses, single family houses, industrial buildings, commercial buildings, all of those assets can be owned directly by your IRA or solo K. Now, for larger deals, most of the time what we see is clients will get involved in partnerships and joint ventures. They'll become one of many owners of, let's say, a 100-unit apartment complex. And so a lot of times they'll use LLC structures. They'll use, different corporate entities so that it's just simply one entity, if you will, one LLC that owns the 100-unit building, but it might have 15 different members, for example, inside that LLC. But really the way that I like to say it is, as long as you're making an investment with your self-directed account, most of the time you can do the deal. So it can be the rental property, it could be the fix and flip deal. It can also be if you're working an off-market deal and you're wholesaling a property or you're putting an option on a property. Those types of strategies can be utilized inside your retirement account as well. Breyan, I believe you actually do some wholesaling, so that's something that you could utilize once kind of your basic human needs are met, you're paying your bills, all that kind of stuff. At a certain point, you just don't want to pay taxes on some of the investments you're making, and so these retirement accounts are great ways to utilize that. Joint ventures, as we mentioned, is basically just partnering with either other retirement accounts, individuals, or companies to do a deal. And then private lending, sometimes called hard money lending. Really, it's just the retirement account being the bank many times for other investors so that they can do the fix and flip or the spec house or buy rental properties, whatever their strategy is. And something we won't really get into today, but there's also a way in which you can buy a property with your retirement account that you're actually going to want to use personally in your retirement years. So it might be, I'm jealous, Breyan's still down in Florida, down in Tampa. I grew up down in Florida and I went to school in the Tampa area for college. And so, a lot of people buy condos down there. They buy that great little place right on the beach. You can actually use your IRA or 401k to buy that condo. And then in your retirement years, you'll actually be able to get personal use if you take a distribution. So as you look at the process, it's basically kind of broken down just as it is with any company. First, you got to open and fund your retirement account. And then after that, you go and identify an investment for your portfolio. You're going to wholesale a deal, fix and flip, buy a rental, whatever it may be. You're communicating with our office for the paperwork so that it's actually your IRA or 401k making the investment. And then the end result is your retirement account actually directly owns either the property, the ownership in the business, whatever the case may be. And so ultimately, because the IRA or 401k owns that asset, it gets all the benefit associated with the ownership. So any income derived from that flows back to your retirement account. Now, when I think about these deals, to me, I break it down into a few different acquisition strategies that you might be utilizing. So option number one is where the IRA or 401k is going to be the sole owner of the investment, and it's just simply going to pay cash. So you're going to buy a $100,000 condo. The IRA has over $100,000 in cash. It pays cash for the property. Very, very straightforward. The second option is the IRA or 401k is going to partner with somebody else, do a joint venture deal. So it might be partnering with another retirement account. It might be partnering with an individual, a company, somebody else, and then they're going to get together and do that particular deal. The third option is where the retirement account, the IRA or the 401k, is actually going to borrow money, either from individuals, from banks, whomever it may be, so that it could then buy a rental property or do a fix and flip deal. So those are just some strategies that you can kind of use to model, if you will, how you might be able to utilize these accounts. So the first one is just a very, very simple loan. So Susie Saber, she gets the fact that, you know, real estate can be a powerful tool. She's looking for income. She's not happy with the 1% that she's getting in her CDs and money markets. She likes real estate, but she's not going to go out there like Breyan is and be, you know, beating the bushes trying to find deals, sending direct marketing. You know, she's not going to want to do that level of hustling, but she wants to be involved in real estate. And so her IRA is just simply going to lend another investor who's going to do a fix and flip, lend them $100,000. Very, very simple terms, just simply 12% interest, and the loan is out for 7 months. So Susie's IRA makes $7,000 because it's $1,000 a month at 12%, just interest only. You're not amortizing it, anything kind of complicated like that. So a very easy way for Susie to make $7K on $100,000 in 7 months, versus if she had that money in the bank, she might make $1,000 or $2,000 for an entire year. So that's really the story you want to tell people. If you're out there raising money, how's your money working for you right now? Are you making 1%, 2%? Are you in the stock market that could go down 20% in a week? You know, what is their situation, so that maybe you help them solve that problem by being a resource and a way for them to make more money. And also keep in mind, we're now going to delve into strategies where the IRA or 401k is actually going to directly own the property. So in that, you want to make sure that you as the account holder, your spouse, and your lineal family members, upline and downline, are not providing any services to the retirement account. So they cannot be the realtor on the transaction, that closing agent, whether it's an attorney, title company, escrow office, depending upon the state you're doing business. And also you cannot provide the sweat equity. So you cannot personally, you know, paint the property, put a new roof on. You have to hire out handymen, contractors, whatever it may be, so that they can do that work. So we'll just run through a rental property scenario. Full-time Frank, like a lot of people, he's got the JOB. He likes the idea of real estate. He realizes that's how a lot of people create wealth. But again, he doesn't have the ability to go out there and really work the off-market deals. And so he hooks up with a realtor who finds him an MLS deal. Very, very easy, simple, straightforward deal. The purchase and rehab altogether is going to be about $120,000. It's going to rent for about $1,000. And so, at least in my experiences as a landlord, I find that typically about 40% of the rent goes to paying for, taxes, insurance, management, maintenance, vacancy, all the kind of fun things you get to deal with as a landlord. Those are things that are going to come up. So essentially, you get to keep $600 of that $1,000 that goes in directly back to your retirement account. So again, very, very straightforward, but this is something that people can do all day long. So the next concept is the fund or the syndication deal. And we're seeing a lot of this coming through for individuals, again, that want to be more passive with their real estate investing. They get hooked up with individuals that are out there working many times larger commercial deals. They're buying apartment complexes. And so they want to participate in the investment of the apartment deal, but they don't have the know-how or the skills or the time to kind of put those deals together. So ultimately, Wealthy Will is going to get hooked up with a few different syndicators. And so I actually gave two different types of examples of what I typically see. So the first is that the IRA or 401k can invest in a lending fund. So he invests through his retirement account into many times an LLC, and the operator for that LLC is just out there looking for investment deals to be the bank for, to fund. So they're dealing with individuals most of the time that are doing fix and flip deals or doing like basically new construction. And so they'll fund those deals, and they're charging points and usually a fairly high interest rate. And so ultimately that the deal of that fund is to churn that money as frequently as possible to make a high yield for the investors in that fund. The second opportunity is an apartment fund. So typically what I see with that is investors come in, and usually the pool of investors is putting up the down payment, and then the syndicator and a team of kind of principals are out there, and they get a loan from a bank for the balance of that deal. So it might be $1 million, it might be 5 million, 10 million for the acquisition. So whatever is needed, 20, 30% down payment from the group of investors, and then the bank finances the rest. And usually with the apartment deals, what we find is clients are getting kind of a combination of ways that they think it'll be profitable. So one aspect is the cash flow from the apartments being rented, and usually there's a quarterly distribution to the investors. And then there's also the expectation that at some point down the road, 5, 7, 10 years down the road, the group that owns that apartment complex is going to sell it. They'll make a large spread between what they bought it for and what they're selling it for. And then everyone joins in some form or fashion in the upside from the equity that apartment complex has accrued over the last handful of years. So with those two things combined, the theory usually is that it'll be a pretty good return on your investment from the cash flow and from the appreciation of that property. That's really kind of it. I just wanted to hit a few ways that you might want to think about how these accounts can be utilized. Again, I really appreciate Breyan allowing us to kind of share what we're doing here and helping us kind of spread the word about what IRAs and 401ks can do. And so ultimately, keep in mind for our IRAs, it's free cash accounts. So you don't pay your annual fee on IRAs until you start making investments. So that's a way to get involved, get set up so that you can take advantage of the opportunity when it comes across your desk. Also, again, in appreciation for Breyan, I'm actually waiving our setup fees. So definitely feel free to contact us, especially right now in December. If you're listening to this now, we have a lot of activity, a lot of people trying to get things done by the end of the year. So definitely feel free to contact us. And as you can see, the annual fees, the transaction fees, and the hard costs. So again, Breyan, really, really appreciate it. And again, I'm Sean Mckay with American IRA. Definitely feel free to reach me, Sean, SEAN, at AmericanIRA.com. And you can reach me at my Charlotte office, where I am 95% of the time it's either Charlotte or our Asheville headquarters, but the easiest way to reach me is the Charlotte number, 704-633-8155. So that's all I got, man. I really appreciate it.
Man, I really appreciate you, bro. That was so amazing, man.
Well, I love that you wanted us to hit the solo K. That shows that you've been studying this stuff, because solo K, it's a great tool, but it's an advanced tool. So you've definitely been doing your homework on the best ways to work these accounts.
Man, you you have to stay fully prepared, you know what I'm saying? Like for what you envision your future to be, you know? So like I don't strive, I'm not striving for anything mediocre, man. Like, you know, I'm going for all or nothing, bro.
Yeah,
You know,
I love it.
so yeah, that's my approach, man. So I need to know about the solo 401ks, you know?
Yeah.
Proper
No, well,
proper proper preparation prevents piss poor performance.
I love that. I love that. That's great.